July 2025 came in swinging with numbers that nobody saw coming. We're talking about medium home prices that defied every prediction, inventory levels that shifted faster than a Florida thunderstorm, and mortgage rates that just gave both buyers and sellers a completely new playbook to work with. Continue watching to find out more. Let's start with the headline that's got everyone's attention: medium home prices. Median home prices in Southwest Florida just took a path that both buyers and sellers doing double takes. According to the latest data from Southwest Florida MLS, we're seeing some fascinating divergence between market segments that tell us a much nuanced story than the simple price up or price down narratives you'll hear elsewhere. The median sales price has just hit $355,000 in July 2025, which represents a 1.4% decline compared to July 2024. But here's where it gets interesting. We saw a 4% drop from June to July, which is actually larger than a typical seasonal adjustments we usually see. This isn't panic territory, but it's definitely a recalibration that smart participants need to understand. For buyers, this price softening represents the first baby boom we've seen in months. We're not dealing with the bidding wars intensity that defined early 2024, and sellers are becoming more realistic about pricing expectations. However, don't mistake this for a crash. We're looking at a healthy market correction that bringing valuations back in line with local income levels and economic fundamentals. For sellers, this means the days of throwing any price on a property and watching it sell in 48 hours are behind us, at least for now. We need to price strategically, prepare your home to compete, and understand that the power dynamics has shifted slightly towards buyers. The smart sellers who adapt quickly to this new reality are getting excellent results, but the margin for error has definitely shrunk. The price adjustment is actually setting the stage for more sustainable long-term growth rather than the unsustainable appreciation rates we experienced during the pandemic years. Inventory story in Southwest Florida right now reads like a masterclass in supply and demand economics, and the numbers are revealing some surprising trends that contradict what many people would assume would happen this summer. Active inventory across our region sits at 26,364 homes, which represents a 6.9% decrease from last month, but actually shows a 17.1% increase from this time last year. This means we're seeing homes available for buyers compared to 2024, but the pace of new listings compared to market has slowed down recently. This tells us that properly priced, well-presented homes in desirable areas are still moving at a healthy clip, while overpriced or poorly positioned properties are starting to sit longer. The month supply of inventory has reached 9.6 months, which puts us firmly in what economics call a balanced market. For context, anything under 6 months typically favors sellers, 6 to 8 months is considered balanced, and above 8 months starts to tilt towards buyers. We're in that sweet spot where neither buyers nor sellers have overwhelming leverage, which actually creates the healthiest negotiating environment we've seen in years. What this means in practical terms is that buyers now have time to be selective, schedule multiple showings, and make thoughtful decisions without the pressure of losing out to cash offers within hours. I'm seeing buyers who take 2 to 3 weeks to evaluate properties, getting inspections done properly, and negotiating repairs rather than wavering everything just to compete. For sellers, this means their home needs to shine from day one. You can't count on desperation to drive up prices anymore. The properties that are succeeding right now have been staged professionally, priced accordingly to recent comparable sales, and marketed with high-quality photos and virtual tours that capture buyers' attention in an increasingly crowded marketplace. The mortgage rate landscape has just delivered exactly the kind of clarity that both buyers and sellers have been desperately waiting for, and the implications are reshaping affordability calculations across Southwest Florida in ways that might surprise you. As of the end of July 2025, we're looking at a 30-year fixed rates averaging 6.375% for comforting loans, with APRs hitting 6.432% when you factor in all the associated costs and fees. Now, before you start thinking these rates are deal breakers, let me put this in perspective. Yes, these rates are significantly higher than the artificial low rates we saw during the pandemic years, but they're actually right in line with the historical averages when you look at the past several decades of lending. More importantly, the rates environment has stabilized enough that buyers can make confident long-term financial plans without worrying about dramatic shifts week to week. Here's a real impact on your buying power. A buyer with a $400,000 budget who was looking at payments around $1,800 per month at a 3% interest rates is looking at approximately $2,433 per month at current rates. That's a significant decrease, but it also creates opportunities for savvy buyers who understand that home prices have adjusted downward, particularly to compensate for higher borrowing costs. You're essentially trading lower purchase prices for higher monthly payments, and depending on your financial situation and long-term plans, that can actually work in your favor. For sellers, the rate environment is creating what I like to call the golden handcuffs effect. Homeowners who locked in rates below 4% are extremely reluctant to sell and give up those favorable terms, which keeps inventory somewhat constrained despite the recent increases. This is particularly noticeable in the move-up buyer segment. Families who might normally sell a starter home to buy something larger are choosing to renovate instead. The smart money right now is recognizing that rates in the mid 6% range represent the new normal for the foreseeable future and making decisions based on a reality rather than hoping for a return to pandemic era rates that were historically anomalous and sustainable. Cape Coral continues to be Southwest Florida's most compelling real estate stories, and July's numbers reinforce exactly what this master plan community remains a magnet for both families and investors who understand value when they see it. With a median sales price of $333,000 and 571 closed sales in July alone, Cape Coral is demonstrating the kind of market activity that indicates healthy, sustainable demand rather than speculative bubbles. What makes Cape Coral particularly attractive right now is the combination of affordability and lifestyle that's becoming increasingly rare in Southwest Florida. You're getting access to waterfront living, extensive canal systems, and proximity to some of the best beaches on the Gulf Coast, all at the price point that's still accessible to middle-class families. The median sales price per square foot of $215 represents excellent value when compared to other waterfront communities in our region where you're looking at $300 plus per square foot for similar amenities. I recently had a realtor friend of mine who worked with a family from Ohio who bought a beautiful 4-bedroom home on a canal for $365,000, a property that would have easily commanded $400,000 in Naples or $500,000 in Bonita Springs. They're getting boat access to the Gulf, a 3-car garage, and a pool, all in your neighborhood where their kids can bike safely to school and are 15 minutes for restaurants, shopping, and entertainment options. The infrastructure improvements that have been ongoing at Cape Coral are finally paying dividends for property values. The completion of several major road projects has reduced commute time to Fort Myers, and the addition of new shopping centers and restaurants has created a kind of walkable lifestyle amenities that today's buyers prioritize. We're seeing a new generation of builders creating energy-efficient homes with modern floor plans that appeal to buyers who want new construction without the premium price you'll find in some of the newer developments further south. Looking ahead, Cape Coral's combination of available land for development, reasonable pricing, and strong infrastructure makes it one of the most sustainable growth markets in our region. The recent slight dip in pricing has created entry opportunities that likely won't last through the fall selling season. After analyzing July's data and talking with dozens of buyers, sellers, and real estate professionals, I'm seeing 3 distinct patterns emerging that are going to define how smart market participants approach the rest of 2025. First, we're witnessing what I like to call the quality premium. Properties that are move-in ready, professionally staged, and priced correctly are still selling quickly and often above asking price, while homes that need work or are overpriced are sitting on the market significantly longer than it would have even 6 months ago. Second, the buyer demographic is shifting towards end users rather than investors, meaning families who plan to live in homes they purchase are driving most of the activity, which creates more stable, predictable demand patterns. Third, the seasonal fluctuations that are historically the final market are becoming less pronounced, while strong activity continuing through what used to be slower summer months. For buyers entering the market right now, my advice is straightforward. Take advantage of your increased negotiating power, but don't overthink the process waiting for some magical perfect moment that may never come. Get pre-approved with a local lender who understands our market, work with an agent who has recent transaction experience in your targeted neighborhoods, and be prepared to move quickly when you find the right property. The inventory we're seeing won't last forever, and the buyers who are decisive while being thorough are getting the best deals. Sellers considering listing in the next 90 days need to embrace the new reality that marketing matters more than ever. Your home needs to be based on what's actually selling, not what you think it should be worth or what your neighbor's house sold for in different market conditions. Professional photography isn't optional anymore. Minor repairs and updates that you might have skipped during a hot market are essential now, and your listing agent's marketing strategy needs to include comprehensive online exposure and proactive buyer outreach. The sellers who are treating this like a business transaction rather than an emotional journey are consistently getting better results. Let's wrap up with 3 key takeaways that should guide your real estate decisions for the rest of 2025. First, Southwest Florida's market has evolved into a more balanced and sustainable environment where both buyers and sellers can succeed if they approach transactions with realistic expectations and solid preparation. Second, affordability has improved for buyers willing to work within current rate environments, while sellers who price strategically and present their homes professionally are still achieving strong results. Third, neighborhood selection matters more than ever. Areas like Cape Coral that offer genuine value propositions are outperforming markets that were driven primarily by speculation. Whether you're buying or selling your first home, the key is always to work with a professional. Down in the comment section below, I have a step-by-step guide of whether you're buying or selling, so you can understand the process more as you continue through it. If you have any questions, please put them down in the comment section below, and I will reply to each one. Thanks to those that have watched this far, and while you're still here, please don't forget to subscribe and hit the notification bell so you never miss these monthly market updates that can impact your real estate decisions for the rest of the year. Thank you for watching.